Well, good morning and welcome to the trade setup right here on BloombergQuint Live. Well, the excitement has completely diminished, and maybe the world markets are to be blamed for that. Maybe the perception of what people had in mind for the package coming in from the finance minister and what has come in to be blamed for that. Multiple cues, and we'll talk about all of that. First, I think the commentary and the warning from Jerome Powell kind of set the cat amongst the pigeons when it came to the US markets yesterday. So I'll start off with the globe first and then move on to the local news. I'm not giving coronavirus update because that is anyways bad. I mean, that the US cases have risen quite a bit, the number of deaths have risen quite a bit, so I don't want to talk about that really. But the economy, and there is lots of economic news, so I'll stick to that. He said that the US economy faces the unprecedented risks from the coronavirus if fiscal and monetary policy makers do not rise to the challenge. He debunked the negative interest rate tool, saying that the current toolkit that the Fed has is probably the best place to utilize to help save the US economy. But the comments certainly brought down the US markets close to support levels for the S&P 500, close to 1 month lows, multiple factors out here. And you don't quite know what will happen during the course of the next few days because the last 2 or 3 days have been particularly bad. Having said that, the US futures have risen marginally in the session today, about 0.3, 0.4%. So after 2 or 3 days of a downtake, the US futures are pointing towards some bit of upsides. Let's wait and watch if these last. Asia, mixed bag, though largely lower. SGX Nifty indicates a start, which is about 1.5% odd lower in trade, so shouldn't surprise. It's a bit of a slam dunk that we might have on open for a lot of pockets because I think the package is kind of disappointed. And why? I'll tell you. So there are some interesting thoughts there. One, the key pointers according to me, which are positive in that sense, the CPSEs and Government of India, I think it was mentioned that they will clear all their dues to MSMEs in the next 45 days, and that 3 lakh crore backstop of guarantees that have been given should actually be great for MSMEs. MSMEs is the big problem, just that there's no cash dole out being given. It's a guarantee that is given. And I think Rahul Bajoria and a couple of others who, and Abhizir Divanji, etc., who spoke about it, said that this is positive for MSMEs, positive for even NBFCs. And therefore, there is a whiff of positivity within this as well. Frankly, that is part one. The 30,000 crore liquidity facility for NBFCs, MFIs, HFCs should also be viewed marginally positively, though the number might be argued that it's too small. Nevertheless, there is some positivity in that overall details that was given out yesterday. The other big thing, though, that has been done is the 90,000 crore liquidity injection for discoms. That's a direct injection which PFC REC will use to pay the state gencos and the boards, the state boards which will pay to the gencos, and therefore that's a positive for the power space at large. But I think the market was hoping for more. We still have some more press conferences from the finance minister, maybe today, tomorrow, and maybe some details would come out further as well. But all in all, it was not as big bang as what the market thought the PM address was saying, and that's why I think we have this disappointment in the markets today. Dare say, you never know, it could get exaggerated as well. So the markets may be back to following the global markets playbook, I think. And if the global markets are going to be lower, it's very unlikely that India will head higher. A lot of talk of the markets moving up to 9,700, 9,800, irrespective of what happens to the globe because of the stimulus. I think those hopes are washed out of the window. Now, select NBFCs, as I said, might be able to do better today, and power generation companies likely will outperform the markets today. Watch out for Tata Power, NTPC, etc. All of those could be in focus. The stock of the day, to my mind, though, is ABB for all the wrong reasons. It's not an FNO stock, but the results were so bad. I mean, the revenues were down 18%, which is led by the decline in the robotics and the motion sales business. Industrial automation sales too declined about 19%. But look at the operational performance. EBITDA was at 14.5 crores, declined 90% on a YOY basis. EBITDA margins at 1%, a contraction of 691 basis points on a YOY basis. Outstanding order book declined about 6% on a YOY. The outstanding book, it may have risen a little bit from the declared numbers in the Jan quarter, but the December quarter, but the outstanding order book as a whole, YOY, is down about 6% as well. So the numbers were really bad. I wouldn't be surprised if the stock starts off lower. It's a cash market stock, so the liquidity would be determined on what happens in actual trades and not in the derivative session. But do watch out for ABB. There are some other stocks that I would keenly watch out for in the session today as well. Mind you, the bias might be towards the negative side, and therefore you have to be mindful of longs. But on the short side, or on stocks which might be weak. Now, Godrej Consumer. I'll first tell you the numbers, then the valuations. So the volume decline was 15% due to COVID-19 disruptions. The consol EBITDA declined about 18% in quarter four. Now, the management has said that April saw growth for India sales. So there's a whiff of positive commentary. They've said that they might expect H1-led recovery to be seen for Godrej Consumer as well. The valuations are certainly not terrible. I mean, they're 35 times FY21 EPS as per a Jefferies note. So they're not as expensive as some of the others, and therefore may not fall too much as well. But the volume decline number of 15% is an eye popper, really. So the numbers basically were very bad. Let's wait and watch how the street dissects it. The other one, which is a bit confusing, is NTPC as well. What's happened is that Power Finance Corporation and REC will infuse liquidity of 90,000 crores to discoms for exclusive purpose of discharging liabilities to the power generation companies. However, there is likely a one-time hit, and likely a one-time hit we do not have. I mean, the message should be out and clear. Maybe it is, maybe it isn't, but there's a one-time hit of 10% due to waiver of return on equity in the fixed charges that NTPC enjoys. So if indeed there is a waiver that NTPC has to give on that ROE, that's about a 9-10% EPS hit for NTPC, and that is a negative. Now the stock has been very, very flat in the last 7 days, about 4-5% in the last 1 month, so hasn't really gone up. The battle is between the sentiment of liquidity coming in finally, that 90,000 crore discom package, versus this small hit that has come in. Not small really, 10% for 1 year, and therefore I'm saying it's small, but that hit that has come in. What wins? Depends. I think viewers will have to take their own call out there. It's difficult to kind of mention what would happen to NTPC. I think PFC REC could be negative because the burden of the state power dues, which were earlier on the balance sheets and the P&Ls of NTPC, Power Grid, etc., now shift to PFC REC, even though there are state guarantees, but that burden shifts to these books, and therefore my guess is that it should be negative for PFC REC. Let's wait and watch. Bajaj Finance has some reiteration of a buys because of the package, so let's wait and watch what that one does. But viewers, these are the stocks that you have to monitor in the session today. I just want to end with a quick thing. It may not be there as graphics, but I just want to tell you that I think there was the head of EPFR in an interaction, I think it's CNBC Global, mentioned that they are finding a lot of foreign managers globally reshuffling their holdings in the turmoil to China. Allocations are actually increasing to China. So much as the world thought that people will not invest in China, those investments are actually moving up from global fund managers. Well, so much for the belief that things will start moving out of China. They don't look like right now. Thanks so much for tuning into the Trade Setup today.